Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and Discord? Thanks, Marty. How we do it in YouTube? Well, good morning, everybody. Thanks for visiting the Trader Lab this morning. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream is about integrating Bookmap OrderFlow tools with auction market theory using the volume profile in the intraday developing time frame. It's based on structured trades. They're available to all of you at no cost in the Bookmap Discard Trader Lab. The Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. The idea of the Trader Lab is to help traders build out the business side of trading, to understand how it works, what it is, and how to potentially create sustainability in this business. And you're all welcome to the Trader Lab, and there is no cost. If you're visiting in YouTube, there's a link down there. You just have to verify your Discord username and email, and then you'll be good to go. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And I have a couple announcements for you today, and you might want to take a close look at what I'm about to show you. It's pretty important. And then we'll get into today's trade. Theoretically speaking, let's see if I can get these things going. How about this? 50% off Bookmap Global Plus and Data. And this applies to monthly users, if you're currently a monthly renewable, and there's other variables. Go to bookmap.com, read all about it, as they say. And this is good through July 11th. So up to 50% off, I think, is pretty sweet. You don't want to miss out. You've been waiting for a sale. Here you are. So one moment, please. Got to move an order around here. Sorry about this. You know how it is, right? Okay. And there's one other. Yes, there's more. There's going to be a Pro Trader webinar series, and it's going to be focusing on the heat map. Now, I'm sure you guys think that, the heat map, it's one of the core components, yet many of us don't understand it, or at least understand ways to use it. Now, I cover a lot of this in Trader Lab when we talk about, when I go through our structured trades, but I think a little more focus on the heat map, what it represents, how to use it, what makes it special. It was one of the key, in fact, the key element initially when I purchased Bookmap in, I think it was 2015. And it's always been part of my trading. And I know we look at a lot of different elements, but there's going to be a series, and I think you guys ought to take the time to look at the different traders and how they use it. There isn't, like everything in trading, you have to find what speaks to you. And I think the heat map, I find, speaks sometimes in a very clear manner. And like everything, it's not a buy-sell indicator. Order flow is really at a different level. And what we want to do is see confluences of inputs that we can discern and create a probability or an edge. So we'll be talking about that, and that's going to start tomorrow, I believe. And Dan, you might want to, if there's a special link or something, I'm not sure where that will be taking place, but you can look in the events schedule, and Dan, maybe you can post something as far as where this might take place. So let's not forget about that. Okay, now let's see if we can move the ball forward here. This is the RTH Open. Now, we had the 4th of July holiday. All that has been scrubbed, which means removed from my data. So the last data I have is Thursday. I'm sorry. Let me get this right. Yeah, Thursday, the full RTH session, and then there was a partial session on July 4th that has been removed. So what we had then is the gap and go, and I've always spoken about that the market tends to throw a party before national holidays, and then after the holiday, we can get a directional move in the opposite direction. I always talk about this, and those of you who've been following the streams. Now, the directional move doesn't mean necessarily we're going to jump out the window. I have seen some very meaningful reversals after the holidays. But you'll notice today, you've been following, the market is very lethargic. What that is telling us is the higher time frame is not participating currently in this market. It is short time frame traders like us. So that really means patience and trying to wait for key locations, not FOMOing in. You have to be very, very conservative and patient. Now, conservative means not being keyed by your cortisol, your adrenaline, and all this stuff, seeking the dopamine fix. You come in here just like a wild animal and start slinging it, that's probably not going to work out too well. So now here's something for you guys to think about. How much time do you spend preparing for trading? Do you do homework the night before? Do you review everything? Do you sit down before the market opens and develop a plan? Look at who's vulnerable in the market. Where are the stops? Were the stops above Thursday's high, or are they below Thursday's high? There's a gap below us. Do you think maybe we'll come back into the gap and take out the longs that are up above us? What do you think? Now, I can't really say that Thursday had value, but I will say that it looked pretty extreme to me. When you get a new all-time high and then you open lower the following day, what do you think? Remember, the market goes up to go down, and the market goes down to go up. So let's look at some of the information we have prior to the open. Now, we already know what happened Thursday, new all-time high, very exciting. Here's what else we know. So yesterday's high, I'm going to be referring to yesterday, but it's Thursday's high, new all-time high. There is no value. Naked volume point of control was here, so that's the highest volume price, closed on the high. Looking good, Lewis. There's a single here. That's where we accelerated, and we never came back down to fill it in. So we spent our time in the session up in here. And 70% of the volume took place in here. So this was all compressed up on the top with a single. Now we go to ETH. Just look at this. Where does the ETH high come? Right there. Now, whether or not you want to say we had any value is questionable, but let's just say that what we had was a compression of energy, a single. And what does the market do in the ETH? It tests here. Didn't get there, got here. Then what happens? Let's keep going. We have yesterday's or Thursday's low, the high of the gap. We check into it, the ETH low, and then reject it. Now, so what does that say? Before you go any further, what does it say? Is it possible it says With the RTH open, let's look. What does it say? Overnight volume point of control, highest volume in the ETH. We test yesterday's low, ETH low, too low. We test the single, look at the story, too high. And even that might be too high. Kind of depends what your thought is on that. But this is too high. So I got too high, I got too low. What does that say? Potential for two-sided trade. Okay? So we open inside of yesterday's range, but lower. So let's look at a couple of ideas. First of all, when you open in range, but not in value, and I'm not so sure we had value, but let's say we did. What does it say? The market is slightly out of balance. And what can we anticipate? Two-sided trade. Then what happens? Do we break out of the previous day's range? And of course, with the gap, quite possible to come down here, right? And if we break out of yesterday's range, what might we want to do? We would want to trade in the direction of the breakout. So, and that's based on our context sheets, which I shared with everybody in the Bookmap Discord Trader Lab. It gives you a blueprint of conditions. So then let's go back to our statistics. We're opening lower inside of range. What does that tell us? Well, getting to the overnight volume point of control is about an 80% probability. Where is this thing? There. Okay. Getting to the ETH low, about a 69% probability. Taking out the first hour's low, 62%. Taking out the previous low, 53%. So the numbers are somewhat skewed to the downside. Now, the thing to understand, these statistics do not know anything about Thursday's behavior in the sense of the gap and the close at the high. That, all we know is basically in a very broad stroke that the market opened lower inside of the range, but outside of value. So that means it's out of balance. And so there's these two possibilities. Based on the ETH, we can have what's called two-sided trade. But if somebody doesn't grab the ball and run with it, then we're just going to slosh around until somebody takes control. Now, one of the things I always talk about in Trader Lab is the market goes up, go down, and the market goes down, go up. Why would the market go down today? Because we have a gap and because it's been on a tear. So what does that mean as far as the condition of the market? The market is long. Market means when the market is long, that means you've got everybody kind of on one side of the boat, and that boat is tilting. It's going to need to equalize. So the sellers that are holding in this market, which is primarily short-term traders like us, and maybe some swing traders and all, but little traders, not the deep pockets, not the banks, most likely. They have not been active. So if it's small time traders, if you will, weak hands, then those stops will become sellers. So the potential for today then is two-sided trade, maybe trap some longs back in who are responding to the lower open, and then we got to see what it does. And then if it can't continue, then it's shorts. Is everybody tracking so far? Flow state, no, I'm talking ES stats. This is the ES here on the screen. So let's take a look. So let's go to RTH open. So what we get initially is what's called responsive buying. That means open lower and the buyers go, oh, thank you. Well, maybe, who knows? RTH open, so let's see. So we get aggressive buying right off the open. Now, when I see this, I'm a little perplexed by it. I'm going, well, that's kind of unusual. I didn't really think I would see that. So right there, I'm going, which is what I do a lot of the times. I go, what's that all about? So now I don't have a trade here, but I'm watching the developing volume point of control move higher. That is telling me there's more volume here than there was down here. Of course, because the market ran. The market did not pause anywhere. And now the high volume is here. So now we want to see what happens up here. And in this scenario, I get very patient. I just, I go, I don't know. So, and I truly don't. I just get patient. I don't have a location. Now here, I break low. When I break low, the suggestion to me is, the way I read this is, we might have found too high because now I'm under the retail price. So I have a couple possibilities. I'm going to label this. I call it a variable high volume node. And there's something else I know. Let me just get this in here for you. So I label these because at the beginning of the RTH session, there's no volume. So as volume starts trickling in, this developing volume point of control starts moving around. So this says there's more volume up here, and you can see why. There's a consolidation. So what else do I know? I had buyers here. I had buyers there. I have a sweep here. So these buyers are active here. And my sellers are up here. That's what I know. So I've got my sellers here, right there. And I have my buyers down here. Okay? So buyers and sellers. And you can kind of see, in fact, I got to turn some things off here so it doesn't confuse you. One moment. Those HV and LVN levels you see are current. I don't want current levels until we get into real time, assuming we do. So 1 second. Okay. That ought to do it. All right. So now, so we get our liquidity come in here. This is the heat map. No idea. Sweep here, counter rotation. Sellers were here. There's the icebergs. They sell some more. Break. Buying icebergs here. So no, don't know. So I'm just sitting here. I was not active. Variable high volume node. Now right here, I'm looking at this, and this is a possible short for me. However, I have this sweep. So now I want to see, can I come up? Let's see what it does. Right here, this is the variable high volume node. I get the sweep, which suggests counter rotation. I have my micro high volume over here where the sellers were. Liquidity comes in here. That's pressure. This sets up the short. This is my first trade. It's here. I just sort of, in this, it was kind of like, let's be patient. So anyway, this right here was my support. When I break below it, I come back up and check it. And I also have the mid, and I got the VWAP, and I have this. So right here, this is my entry. Right here. Break, test. Now right here, I'm looking at the mid, I'm looking at the VWAP, I'm looking at this, and this is a structured trade in the Trader Lab. Break, trigger, test, south. Okay? Then it's get risk neutral. So that, for me at least, was my first trade. So, first trade, risk neutral, VPOC migration. I come across here. Now, right here, this is my resistance. here. This is an outside edge. Let's talk about the language of the market for a moment. Now, what I'm doing is I'm using participant behavior. It's called the auction, and all the auction is participants are trying to figure out what's too high, what's too low. It's like shopping. The price is too high, you don't pay it. Somebody might pay it, but there isn't a line to pay high. And if it's on sale, what will happen is the buyers, if they perceive a sale price as too advantageous to them, and they start consuming the inventory, which is the limit orders, if we get through there, then the sellers are going to raise their price, and the aggressors are going to have to pay up because they're crossing, if that makes sense to you. So right here is the retail price, and right here we cross over. So you have two choices here. You can exit your short here, or you could be sitting in this thing and you could be outside. So let's look again. Variable high volume node is here. So all of this is fine. Even this is okay. This right here, when it shifts up, you want it to reject and get under here. Let's just look at this. So what we have is two-sided trade going, and it's a real pain, literally and figuratively. So for me, I'm trying to go for the ETH low and whatever's down below. So that's where I'm trying to go with this thing. Let me just label this. By the way, if you have questions, post them. I'll do my best, okay? So too high, too low. This is too high. Break high. So you have a couple things you can do here. When it comes across here, you can exit. When it comes back to the liquidity, you can sell it. These are all possibilities. This is your support. If you got short here, you got to scale there. If this is too low, we can come back. And this shifts up, you need to break low. If you took this against this liquidity, this is your support right there. You got to scale ahead of that. So it's from there to there. And if you don't get back to here, then it's the possibility that, whatever happens, happens. It's just part of the thrill. If you took this, you have to get below here. You got to clear, let me show you, there, and then you got to clear this. Okay? So what do you have? Short, either out or hold, short to there, up here into liquidity, break, short here, trying to go to there, and out the bottom. That's what you're trying to accomplish here. Cross above here, it's the same as this. You can exit it, or you're going to keep your stop up here. It's whatever your thing is. Now everybody gets cleaned out here. Let's look at it. So this is the variable high volume node. This is the opening swing high, I believe. Stops are going to be up here. Let me see if I can show this to you. So, but here's the real thing with this. I could show you these locations. The only trades you should be taking are the ones that are vetted. And in two-sided trade, this is what's called mean reversion. And it's mean because, and this is jumping around. It's showing that there really isn't a consensus. Now we come up here, right? Same place we were before. The volume is here. When we come up here, basically, this is where the sellers were, right? Liquidity comes in, buy stops, selling icebergs, no clue. Let's watch. Buyers are here. This is a trigger. These guys were absorbed. Sellers get below the buyers. There's your trigger. This is your test. The sellers are still here. Break again. It's another trigger. So you've got a short here. You have the possibility for a short there, actually. And your stop has to be above the high. And then this shifts up. That's a problem. It's got to get below. It does. Then your job is to get risk neutral. There's a sweep here. So it could do this or keep going. And then we know we have longs, under the current low, and we take it out. So you'd be risk neutral. Then what you need to do with this is we want to stay below here. And if we can, we'd like to stay below this. And really tough trade. I mean, for me, it was just getting in, getting out, putting it back on. Not my favorite condition to trade. This could be a short if it fits your plan. If you don't have enough range, that's something you have to determine. We have at 9:30 something called the IB. The IB is wherever the low is, the first hour's low at 9:30, and we have yesterday's low. So a couple things you can think about. The percentage probability to take out the first hour's low is 62%. And to take out the ETH low is 69%. So this. Take out yesterday's low, and these are, you have to vet all these for yourself, is 53%. But don't forget, we have the gap. So for me, everything is pointing south of the border. That's where I'm trying to go. I'm trying to stick with it. So let's just check this. Okay. So this is a questionable short because of the range. If you take it, that's your business. You have to vet this. We now get below the IB. We have a trade called the IB continuation trade. It's a short. Let me show you. And that comes in at 9:30. So this trade, now this is the IB low. You can see it right there. And we're right at yesterday's low. Now, often what happens, and you guys should take a note of this, when you approach a key location or level like yesterday's low, as an example, you're going to get traders covering in front of it. And of course, we don't have to do anything. This is trading, right? But it would be prudent to consider taking something off, or you are managing a runner, and then whatever happens, happens. We do have a good stat below us too that's open, and it's this. So this is my target because we're looking at the gap low getting out, and this is the next target. So it's around 74, 75. And it never has to get there. It's just the way it is. Let's see what else we got here. I don't think there's a lot more to this. It's just slosh. This right here, VPOC migration, liquidity. Look at this guy here. This can be a short going. In fact, I'm going to show you the IB continuation. Sorry about that. So the buyers were here. The sellers are here. We break below the IB. We test it. This is a structured trade in TraderLab. You'd be getting short. Let me show it to you. So you could be getting short in here or here, and your stop's got to be up here. Outside of this. This is your low volume node. So this is actually mean reversion. This is the mean. So if you get out here, you've got to be thinking about scaling here. Because though it's outside in, and then we're looking for outside. That's the way this trade would work. So you'd be risk neutral. You're right at the previous low. You touch the gap. You still got this going. Let's see where we are. Oh, there we are. So this is not a fun day. It's just not, it's two-sided trade. It's very choppy, hard day to trade. I have not been able, I'm on one runner left at the moment. It's about to get taken out. So that's just the way this works. So what I'm trying to do here, and this is not a recommendation, is I'm trading what's called mean reversion, which is to there. And now we have this. Here, right here, you have a consolidation. Let's just look at what you're looking at here. This is where the high volume is, and this is the consolidation, how this might work. So there's sellers here, there they are, and there are buyers down here. When you come out, that means the buy stops here. These guys are going to get squeezed. And now we have to watch what happens here, right here, because this seller was here. You had your sellers. They came right back in again. And now we have our sellers here. So we need to see what happens now. Are the buyers able to get past this seller, or what's going to happen? And we're in balance. So we can still push outside. This is our outside edge. And then it's possible to come back here, or, of course, to squeeze. So this is important, what happens here. And are we going to come back here, or are we going to continue squeezing the shorts? Because they have their stops there and here. So let's just see what they do. Nobody knows what anything's going to happen, So you just have to kind of hang in here. If you have questions, post them. How are we doing in YouTube? How are you guys? Please give a like if you're finding this interesting. It's just, part of this is the day you get. This is what you got to work with. And if you don't have a trade for this, or you don't have an edge, have you ever thought about there might be some days where you take very few trades or even no trades? This is not a business of showing up and pushing the button every day. It doesn't work like that. There are days that don't favor you. And we need range. If I don't have what I perceive to be the potential for range, I'm just telling you about me. What's the point? Why put risk on if you can't get paid? The dollars are not in the frequency of trading, in my opinion. The risk is in the frequency of trading. The dollars are in being selective and the range. So less trades, less risk. Have you ever thought that when you trade, take a lot of trades, that you're exposing yourself to a lot of risk and not necessarily to proportionate opportunity? If you think it's a video game, you're missing the business. You don't have an edge, and you can't qualify a trade based on your metrics, and you don't have metrics, then you are not going to be in the business. I don't want to disappoint you, but that's really what you need to do to actually be in the business. Once you do the work, you can actually potentially create sustainability. But this is it is not mechanical. And I know we all want plug and play. We all run around, right, looking at what other people do, and they say, do this, the only one thing you need. I'm going to say it doesn't work that way. Don't waste your time. What this is anybody can give you ideas. You got to dig into them. I shared 60 PDFs of structured trades that are available to everyone. But I can assure you, most of you, if you just take them as mechanical trades, will not succeed with them, even though other traders here in the Trader Lab have built sustainability by using what I've shared and reverse engineering it and finding their groove. So uh, I don't take a lot of trades. I don't, I always tell you guys that. In fact, I show you the trades. I put them on and then they either work or they don't. Because if I'm being selective, I'm taking trades that have good potential. I'm not taking trades, and I'm using a lot of experience because I recognize this, but I don't know what it'll do. I don't have anything else. I'm very similar to you, except I've got a lot of experience. So that's one element, and the other element is I have gotten very patient over the years. I have a tremendous respect for risk. And risk also, part of risk is knowing that I don't get paid chasing the market around. And I don't get paid when the condition of the market is very compressed. If I don't have range in the compression, I need to wait for one side to get really squeezed or something to happen that gives me an advantage. So when the other side gets taken out, let's just say the longs from this morning, then that gives me an opportunity to play the short side. Plus, remember, the market rallies in the holidays and the market goes up to go down. So that's kind of where I came in with the idea that I don't want to get long. I want to see what happens when we get the buyers who think that the continuation trade is here. Well, for me, it's got to go down to go up. So that's why I couldn't take a long. I still won't have a long in my plan for today at the moment. I mean, that can change, of course, but my plan is very simple. Market's long. If I get buyers in the morning, that makes it better for the short. That's all I know. And I saw the buyers, and then it's trying to get in here and get positioned to take advantage of the buyers who, because if the market's long with the gap under us from Thursday and I get buyers coming in this morning, doesn't that kind of put sell stops under today's buyers, this morning's buyers, and the buyers currently in here who have stops also? So that creates like an exponential layer of sellers. So I want to trade into those guys. Is that logical? Lee, I don't have a long for today. So when would it shift along? I don't know. Um, and I can tell you something else. If it does shift the longs, it would only be a short squeeze. So I would only use, and this is not a recommendation, because if things genuinely change, I might take longs or more likely just be done. It doesn't matter to me. Because for me, currently, if there is any kind of upside rotation, it's a squeeze of the shorts. Now, look what we did here. We filled the gap. I mean, this is right on the button. Who does this? Short time frame traders, the minnows like us. So if the minnows are the ones that are trading, we're trading against other traders like us. So it can easily get manipulated up and down. So no higher time frame in here. So I just get I don't know. I don't have this compulsion. I don't know. I guess I did early on, well, not early on, but let's just say when I was a high volume day trader, it was, really different in what I did. But over the years, I said, this is just too much work and too much risk. How do I get paid? Well, I get paid in a broader stroke. I'm going to use the microstructure and all my skills that I've developed to understand the condition of the market. But as far as where I trade, I've got to have range. This is where my support is. It's right here. And my resistance is where? Around in here. You know? Buy stops are coming off. Look at this iceberg up here. This is major. If they're showing 857 over here, there's a lot behind this, you know? So anyway, so for me, this trade doesn't fail, and this is not a recommendation until we come out here. And even then, all we might do, here, let me show you. This is called the low volume area, and this is a low volume node. Let me turn something on here. One moment. Okay. Just switching some inputs on here so we can see these on the chart. So this is the outside edge. And if you want to think about how this tends to work, the auction that is, it's a pricing mechanism. So too high, too low, high volume, high volume. And if we leave it, it says too high. Then we start this process again over here. And if that's too high, retail price, we leave it. Now we start this down here. Too high, retail price. Now here's where, as they say, the wicked gets sticky, whatever that is. You Brits can correct me on what that really means. So what is this? Too high, too low, too high, too low, retail. In the fractal, right here, this is an auction. And if this now is too low, we can return to here. And then we can come out here. And if we can stay under all this, we can come back here. We can come back here. And either this is too low or we're going to take it out and get here, which is the target. So, and because this was the fairest price that we left behind that Wednesday. So this is Wednesday's fair price. So what the market tends to do is it's shopping. Is this too high? Well, now this is the current fair price. If this becomes too high, we can come down and check this. And if it's still too low, we can bounce off it and come back here, mean reversion. So in a fractal, and this will kind of twist your brain, so just be patient. This is too low. This might be too high. This is too high. Outside edge is here. There, where the low volume is. So in mean reversion, the market could come up somewhere, get the stops out, and then rotate back here and rotate back here. That's one of the possibilities. The other possibility is this is too low. We're not going to fill the gap, of course, and we continue to squeeze the area and just rotate back up the food chain. Right now, this is your outside edge. So what are we? We're out of Thursday's range. We're under the ETH low, had a high probability. We filled the gap, and we've got this. So at the moment, this is where the bazooka is pointed. That's why short, and whatever happens, happens. I hope that makes sense. Questions, guys? Throw them in the hopper. By the way, while we're waiting for this thing to ferment, and that's basically what it's doing, we have a couple things going on here that you might want to check out. 4th of July sale, 50% off Bookmap Global Plus and data. This is good to July 11th. Go to bookmap.com because there's some variables to this and some configurations to the sale, but you don't want to miss out on it, I would think. I mean, I wish there was a sale when I got my book, but nope. So you guys, anyway, if you've been thinking about it, this is a good time to do it. Up to you, of course. And then we have a Pro Trader webinar series, how to use the liquidity heat map. That is tomorrow. And you might want to check the event calendar, but it will be tomorrow. And there'll be a number of traders who will be what they're going to be doing is discussing how they use the heat map, what it is, but what does it really represent and how do you use it? Because it's not a buy-sell indicator. And I think a lot of us, or at least I'd say a lot of new order flow, those of you who are new to order flow think when you see something red that you sell it. It's not a buy-sell indicator at all. It's really reflecting the passive side, the limit order book. So we'll talk about it. You'll hear about this from the educators. But don't forget this, okay? You'd be kicking yourself if you wanted to try Bookmap and you didn't take advantage of it, as far as I can tell. High volume node, high volume node, high volume node. High volume is, call it a auction or a retail. Now remember, we want this to stay outside of yesterday's range. Now we can check in here, but you want it to stay outside of the range. So let's see what it does. It's not a recommendation. It's not, it's nothing more than market mechanics. Nobody knows anything. And we want to see what happens here. We have a buy sweep. We got a sell sweep. We have this here. Now here's how you might look at this. Are the sellers able to get through this? Now we want to see what happens from here. Okay, this was support. We are under it. This is the next target, not a recommendation. Well, that was nice. This is what trading the auction is all about. This is the target. So this target is achieved. My short trade is over. What can I tell you? That was it. This is trading, with a plan. Doesn't mean it's ever going to get here. It means nothing. Now I want to look a little bit further down the food chain and see what else we got. I want to check a couple things. Hold on, guys. We have to be conscious of 6260. This 6260, we want to be aware of 6260-ish. Hold on a second. 660. Yes, sellers at 6,266.75. Okay, Wednesday's value area low is around 60. This is our next target. Up to you. So this is trading the auction, and I mean, some days you know how it is in trading. Some days everything seems to go according to plan. Other days you're just basically riding the bull. My edge, Quantum, it changed over the years. I used to be a swing trader and a trend follower. Early on, I did that for quite a few years. And then over time, when the technology evolved, I started trading in 1980, so you really couldn't day trade. There was really nothing. There just wasn't anything that you could do that with. So it was, we didn't have the technology. But as the technology developed, high speed, how would you like to trade off a modem? So, things really changed. And then we had domes. Once we had we got level 2, that kind of thing, it really started changing. So, the data wasn't good, but at least we had something, So there's our value area low. This is the next target in here, was right there. So just showing you, some ideas. This is all based on auction market theory. Hope this makes some sense. Are you guys tracking? So quantum, as far as edge, it's really it depends on how one trades, the time frame. If you want to use that, I don't think of time, but we can talk about time. The rotations. The rotations. You really need to be conscious of average true range. ATR is important. What is your average rotation? Also taking back, now there's resistance at 77.5. Let me show you where it came from right here. Buy sweep in here. And this micro high volume is up here. This is not a trade anybody ought to take, don't forget, because this is the target. So let's see what it does. Now, just because it's a target doesn't mean anything. There's fuel under here. If we get down in here, we can collect more stops. There's a lot of stops under here. But for me, and this is not a recommendation, my trade, there's 2 places for my trade to be done. There and there. That's it. Don't care about it after that. If I want, based on my plan, I do have other ways to participate in this. But again, as I was saying it earlier in the stream, I'm not interested in trying to trade this because I'm putting risk on. Where am I going? For me, my day can be done, and I don't really care about it. I'm just here to take trades and not trade like a lunatic, trade where I have range. And that's what you've got to find. No matter what kind of education you get, you cannot replicate what somebody else does. You can get ideas. The 60 PDFs I share of structured trades were never put together as a trading course. There is no such thing. It's a waste of your time. What there is you can learn. You can get ideas like this short here to here, and then down. Some of these are live and some of these are screenshots. But it's sharing some methodology I developed for myself over many years. And the idea of this was to give traders something to work with. Otherwise, you're starting, where you're starting, So anyway, these are available to download. But again, trading is not mechanical. And when you see these, if you go, well, this happens and that, and now you automatically do something, that will not work. It would be nice if it did. But there is no plug and play. You actually got to spend time, and a lot of time, to determine where your edge is. There's a number of traders, quite a few I suspect in TraderLab, who are still mechanical and have not taken this step to get away from being mechanical without thinking in a holistic way. Where is the fuel? Is that part of your trade plan? What happens if I get responsive buying after Thursday's gap and run day? What happens if those buyers get stuck and now they become sellers? These are the questions you have to be asking. Also, you got to ask yourself, what happens if we open lower, the buyers take control, and then let me ask you, where are the shorts? If you have a day like last week on Thursday, where are the shorts? They're gone, right? Why did we go up and make all-time highs? Squeeze, squeeze, squeeze. If you were watching the market on last week, I was pretty amazed to see the number of sell stops coming out way above, new all-time highs. Who's got stops up there? They were there and they were coming out. So if you get the shorts out, then who's in the market? It's the longs. Shouldn't that be in your trade plan to ask yourself conditional questions? If this, then that. If not, then what? If this, then that. If the market's going to go up, what are we going to do? Probably gap again and keep going. Breakaway, breakaway. Well, what happens to gaps? They get filled. Are you not thinking about it, you see? So, and this is basic stuff. And if you're not sure about basic stuff, then you need more of a primer charting education. In other words, you got to understand how the market works. And you can get this from basic classical bar charting. That's what I started with. Classical bar charting, updating my charts by hand every day, at night while it's fresh, then in the morning preparing, and I still do it. I don't have to do my charts by hand anymore, but I certainly don't just sit down and start trading. And I want to make a point of this because this is a serious business and you're a competitor. You got to do what most other traders aren't doing. Let's see what happens up here. Remember, outside edge is here. So this is and yesterday's low. What's going to be, we want to see the behavior and we want to see what happens in this area now. So we'll just watch now. Does that make sense? Whoop, wait a minute. The VPOC I have on Wednesday was 62.75 quarter. Yeah, Lee, context is number one in all of this. The other part of it is context changes, just part of the thrill. By the way, we're coming up to this liquidity, which is kind of where did it all go, right? So here we want to see what happens in this area, and this is also at a key location, okay? So outside edge, and yesterday's low is someplace around here. I don't know where it went, but it's around here. So our outside edge is up in here. And yesterday's low, what, gap low? No, sorry about that. Yesterday's low is up here. Brain is gone. So let's see how this works. Our outside edge is there. There. So the possibility is to come out somewhere. And then this is called mean reversion. And it's not easy in the sense that there's no precision. So what do we know? We know there's stops here and here. So if this thing is going to go down, it really needs to stay below this high volume right there. So we'll see what it does right here. Okay, high volume. And then the outside edge is here. So let's watch it. This is really the outside. So what happens typically at these edges is the market will pop because there's going to be stops. So we need to be looking at the following. Here, right above here, and we want to also look here. High volume. So let's just look at the logic of this thing. This is an auction. Too high, too low, too high, retail, and we broke away from it. I'm not paying that. I'm not paying that. We're out of here. So this auction up here was too high. You had the sellers there. We have, here, let's just look at this. So sellers are here, buyers are here, buyers are here. Right here, the buyers fail. And I don't know if that was news. You know, I don't have that turned on at the moment. So what I know is in this auction, this is too high. Then if I go down to this area, my outside edge is going to be here. Think of it like a separator. So this is going to kind of act like resistance. Let's move this out and see what happens. So when you're trading the auction, what you're attempting to do is get an alignment. So let's see what happens.
Sellers at 60 to 78.
Liquidity here, buy sweep, outside edge. Let's see what it does. And it can do anything. So this is not, remember, I don't call trades, so I take my stop. So let's just keep an eye on this. Because if it pushes through, then it can come all the way back to the VPOC and even get to the IB low. So there's all kinds of possibilities here. Because for me, the primary idea is really done. So that's where the question becomes, do you want to keep trading this? Or are you just ready to sit back and let somebody else have all the thrill and risk? So let's watch right here. Let's watch this right here. This is, remember, this is where this volume is too high. This is my outside edge. It's here. Okay. Now it can do anything, so don't take these things as trades or even anything more than just an idea. Now the thing with this is we have to get, we want to stay under this outside edge. We also have an outside edge here. So these are areas that we want to stay below. If we push through, then this thing is going to fail. This is not a trade I would take. I'm just trying to show you structure. My trade was the value area. and to there. So I don't have anything, but we can try to read the auction and see locations of potential reactions. The idea of trading, I have found, now there's your micro high volume. This was, well, actually, yeah, it's right there. See where this is coming from? So sellers are here, buyers were there. That's the high volume right there. It's like resistance. It acts like that volume point of control. So it's the volume. Chop, chop, chop. Sellers, buyers, break. So now we can come back and we'll see what it does. No way to know. Not our job to know. Our job is to wait for an edge. This is really where your resistance is. So this is the kind of trade, if you put this on, you could do it with a tight stop. The other thing you got to remember is the mid is here, the VWAP, and the VPOC. If I push through here, then there's a good chance I'm going to squeeze these guys out and come back to balance. So this is very important because in the microstructure, this is balance. For the whole day, that is balance. So fractals. So this is like an area to observe. Hope you're getting something out of this. It's the nature of the day. It's like, I'm not a scalper. It's not worth my trouble and brain damage. Here's where this might go. There or there. If it even does that, it has to get under here. So it's outside, and then we can get under here, which is this little bitty node. Then we can come down to here. Buyers were here, and there's micro high volume where it says HVN. So let's put this in here. Let's put this in here because this is where we found our buyers. So we want to be conscious of that, right? Same thing as where we found our sellers. I'm doing the same process from both sides. So this is where my sellers were. My buyers were here. So if I'm trading short term, I could be taking this to this. It's not worth it to me, but well, it's 10 points. I guess it would be. I'm looking at it. But you got to get risk neutral. And now a lot of you guys might think that you put a trade on and then you're holding it for the end of the world. Have you ever thought that maybe you put a trade on, you get risk neutral, and you just take it to target? Have you ever thought about it? Something. I'm going to suggest it to you. Not that you do it, but that you vet it. Because you may find if the harmonic, the typical ATRs, let's say 10 points at the moment, then what are you going to go for? If you can get an outside edge of a 10-point rotation, would you be taking 10 points if you can get it? Or see this come in, which is absorption, buyers, and just that's it. So you got your sellers here, right there was our location, and you got your buyers were down in here, and this jumps in. It's going to skew the book. So now we got to see what happens up here. This trade could just be from there to there to there. And if you get taken out, your runner, you scratch it, you move on to your next trade. What I find for me is, and this is a trade I would take, by the way. So I'm just saying, I don't call them, but I'd say I'd take it. But I'm trying to come down here or lower, but here primarily. My primary target at the moment was here. So I'm good. So I don't need to do anything other than be done or just trade inside of this. Because now I have my locations. So this is my like sandbox to trade. And again, I'm not saying anybody should do this. You got to vet this. And the thing that is most challenging I think, for traders is knowing the condition of the market, where they should trade, but they have to know where they're going to trade before it gets there. That's why I was saying to you, outside edge. Let's look over here. Where were the sellers? All this is on the price map. It was here. So I put all these on the map. And what do I know down here? I got buyers were here and absorption. This is a sweep. There's my reaction. This is a sweep, says downside rotation. The buyers that were there came in here. I'm going to put another little box around this so you can kind of see how you can identify structure. So this is your cell structure. Don't know it any, no clue now what's going to happen. We had this over here. There's your icebergs. So this is our sandbox now. We can get through this. The sellers can take on these guys. Then we can come here. And I can tell you right now, the trade can be done, to here. I mean, it could be a 12-point trade plus a scale. So this is a trade I would take. But otherwise, if I didn't have range, I don't trade. I just don't care. It may sound, I don't want you to take that as flippant when I say I don't care. What it is I am detached and I just wait for the trades that might pay me and allow me to have enough range to get risk neutral. I'm not going to use a shoehorn. It just doesn't matter to me. There's always another trade and there's better trades coming. Okay, the sellers, there's our buy icebergs. And so far, the sellers are consuming the buyers. Does that make sense?
Yes, sellers at 6,169.75.
I'm seeing a question about why do we scale to get risk neutral? The thing about getting risk neutral is developing traders have a real hard time with their psychology and their mental state, fight and flight and all that. By the way, this is where we're trying to go, right? Here. So when you get risk neutral, it gives you a tool to manage your emotional side, fight and flight and the lunatic. So, and it makes a huge difference. So when you start out, I always suggest in Trader Lab, you start with a 2-lot configuration. The job of the first contract is to cover the risk on the second contract or runner. And then it's up to the individual trader what they do after that. Do they just trade to a target and not move their stop? That's where you start. Stops at break even, where the trade fails. You don't get queued. You don't do anything. You don't do this in the live market. You do this in replays. You do it in research. You need to know which trades work for you, and you need to find your groove. In other words, the condition of the market that you can read and relate to. And the condition of the market is not one size fits all. Not only is it different when it starts out almost every day, but we have to adjust quickly to it as it develops. All this takes time and intentional practice. The metrics are going to give you the confidence to manage the fear, that uncertainty, which is just part of trading. Nothing is certain. The only thing that's certain is uncertainty. So now you got it. If you know you can't have certainty, then you can't solve for it. You got to solve for uncertainty, and getting risk neutral helps you manage the uncertainty, because the triggering structure, that the fight and flight, the cortisol, is triggered heavily in this environment. And if you don't understand cortisol, write that down and look it up. And not only look up, cortisol is released in fight and flight conditions, but what does it do? How do you react to it? Spend some time, learn about it. So this could be just from here to here. and it can go lower. It doesn't matter. Can you guys see why this might be a trade? I mean, does anybody not understand why this might be a short? And I'm always going to say it might be because it might be a stop, right? Um, Profit climb. Hi. Thanks for the question, and thanks for visiting Trader Lab and YouTube. I don't look at yearly. I don't need to look at that. Um, Primarily, I'm looking at swings in the time frame we trade. So as high as I go is daily candles, and then the swings in those daily candles. So call it intermediate time frame. I am aware of the week. I'm not aware really of yearly high because all-time high is key. But as far as the yearly high, we're all going to be aware of it, but it's not very important to me. If I know I'm coming up to a key high in a intermediate time frame, and it happens to be the high of anything, I'm going to blow through it. So, or it could blow through it. There's going to be stops. So I don't have to analyze them though. I just know where these things are. Primarily, I'm using intermediate time frame. Now, for me, intermediate is daily swing. So swing high to swing low. I draw a profile over them so I can see the volume distribution in a quote higher time frame. I'm always trading inside of a higher time frame. So think of them like Matryoshka dolls. I always refer to them like Russian dolls, profit climb. So you can do anything you want that gives you information that's usable. I find a lot of information is superfluous and creates conflict. So I'm a minimalist. I don't want anything on my chart that is not usable for me. And everybody finds what is usable. Some traders draw trend lines. Some use moving averages. It doesn't matter. Or Fibonacci, all this kind of stuff. But I think you might find as you go along that less is more. Part of the idea of less being more is if you have too many variables, you can't make a decision because of conflict. I always come back to the way gaming works in casinos. They don't have multiple inputs for blackjack. They just do it the same way every time because the only way they extract their edge is by replicating a process that has an edge, not using variable inputs. They don't, deal 7 cards and then 2 and then 12. They just deal their 7 cards. They cut the deck a certain way. All this stuff. It's always the same. And that's the only way they extract the edge. So for me, it operates the same way. I'm just using minimal inputs and just following an idea, a plan that I've vetted. So, so this is our high volume and this is the next area. It's, over here. So anyway, for me, I'm okay with this to this, you see? And I have to be okay with that. I'm not here to go try to get all of it. My primary target there and there have been reached. Anything under here, it can do it. No problem. And I have loads of stops here. I'm aware of that also. It can get down here. No way to know, Does it really matter? Okay, we got to watch here. We have a sweep, and we're into support. You guys have questions even on this one. And I hope it answered your question there, profit climb, on the time frames. Just think vertical integration. Time frames are a vertical integration of time. When I get into the intraday, I'm not using the clock anymore. No time. Notice where we came. Always blows my mind. Now, the idea is just to make you crazy, everything is random. Why did it not stop there? I don't know. But this tells me potential for at least the counter rotation. And there's my outside edge, which is where the buyers took over there, you see? And what happened here? The buyers were there. They absorbed. What's going on over here, you ask? Buyers, absorption. Can you see why? If I can break down the auction and understand what happened, buyers took over here, buyers absorbed there. This is why I got a box. High volume is there. Where were the buyers? There, and where? There. Now, is it going to keep going? No clue. Am I going to buy it? Nope. Does that make sense? How we doing? Please give a like if you're visiting in YouTube. By the way, I want to remind you guys while we're sitting here touring together that Bookmap has a 4th of July sale. If you ever wanted to try Bookmap, you can get 50% off Global Plus and data. It's good through July 11th. Also, there's other discounts available. So depending on the amount of time and everything. So, and you can take advantage of this if you're currently on a monthly subscription and whatever else. You got to go to bookmap.com and read it, check it out. This doesn't happen too often. I'm trying to remember. I don't remember the last one, if it was Black Friday. Maybe there was one on Memorial Day. I don't remember. Too complicated for me. Also, Pro Trader webinar series is going to be starting tomorrow. How to use Bookmap's liquidity heat map. This is something you want to get a better understanding of. It is not a buy-sell indicator. Now, most traders who come to OrderFlow don't understand what how you can use an OrderFlow tool. It's not, if everything was red, green, spaghetti crosses or a line, we'd all have ATMs in the basement. It doesn't work that way, right? So we've all done that, right? You've done it. I did it many years ago. So let's not keep doing that. Let's not be mechanical. Let's get intelligent about this. Let's try to understand the condition of the market. Let's try to understand where the fuel is. Who's on the wrong side of the market? You need to know that. It should be in your checklist. When you prepare for the day, you should have a questionnaire and ask yourself these questions. Who's on the hook? What has the market been doing? Where's the stops? If I get buying in the morning, what might it be if I open lower like today? Is the market going to go up? Maybe. But what's more likely? The market's been going straight up. You think it's going to keep going straight up, or is it possible it's going to rotate somewhere? And the somewhere is part of the thrill, but do you want to be a buyer or do you want to be a seller? You got to ask yourself the questions. It's got to be a formatted checklist. You got to think from both sides. Write this down if you haven't thought of this. Think like a retail trader. Don't act like one. And by the way, there's a link in the bottom of YouTube. If you're interested in visiting Trader Lab, it's a community of like-minded traders who come together to leverage their collective experience. There's no cost, and it's really about the business, understanding the business you're attempting to be in. It's unlike anything else you've ever done. I can guarantee you. And when you bring your outside world experience here, it will not work. If anything, it'll be a problem and may take you out of the business because you bring beliefs here, which I understand we all do. What else? How can you relate to something except bring your experience from the outside world? What happens if you're on Mars? Is the gravity going to be the same? Is the oxygen the same? Do you have to maybe modify what you believe about Mars or any place else to what it really is, not what you believe it to be based on a fantasy that is not based in reality? So the reality of this business is really different. And we have to train ourselves and desensitize ourselves to an environment of 100% risk 100% of the time. It is not where our comfort is. Our comfort's in certainty and avoiding risk. So you're pushing against primal wiring that does not want uncertainty. It wants certainty. So most of us come into the business looking for plug and play and certainty. And because we're wired to avoid risk and uncertainty. So we seek certainty where it doesn't exist. It's a catch-22. So if you instead come to this business and go, well, I'm uncertain of everything. So can you learn the function in this environment of uncertainty when you're pushing against your primal wiring? This is where you got to do some work. Maybe the most important work you'll ever do. If you can't manage your emotional states, you could have the best trading approach on the planet and you're going to fail. So I would not give it I wouldn't gloss over that and put all your energy into setups. Trading is location-based. Location, location, location. You need to understand the locations. But the psychology to deal with the fear that you're going to have here about is it going to go here, right? All that stuff that runs through your head. What is running through your head? The fear. Because the wiring, your primal wiring, cannot differentiate between this and a saber-tooth tiger. Can't tell the difference. Or stepping in front of a bus, which you don't want to do. It can't. So that's why getting risk neutral and having statistics that tell you mean reversion outside in trading is a context inside of a context. What are we doing? The trend is down. What do? Do we get long? Well, it's up to you. Me, not so much. Me, I just take one side. I'm not interested in being a gunslinger. I'm interested in profits. That's just me. And it has to meet, if I'm taking risk, which for me is about 2.5, 3 points per contract, I got to get paid. Here I got 10 points, okay, I can do that and get a scale at 3 points or whatever and have a break even stop, get to my target, and that's that. Next, get long? Not so much. Somebody else can, and they deserve whatever they get from it. Please give a like. Use the link in the bottom of YouTube. If you're interested in visiting the Trader Lab, be sure to download the 60 PDFs of structured trades. There's a library of webinars. It's all available to you. This is what the Trader Lab looks like. There's a lot going on here, a lot of support. Everything is, we're all working together. There's a lot of work here in the Trader Lab. Data mining, this is an advanced trader methodology, but it's not complicated. There's also a library of webinars. Stop Gambling and Start Winning. You might want to check that out. And the primer webinar has about 34,000 views. You might want to watch that. It's about an hour, and it gives you a high-level overview. And Ned, thanks for curating this, and thank you to everyone in the Trader Lab. Please give a like. If you're in YouTube, don't forget about the current sale going on at go to bookmap.com. It's up to 50% off. You don't want to miss this one. And also, please leave a like on the way out. Thanks so much for visiting today, everybody. Look forward to seeing you tomorrow. Thanks so much. We'll see you soon. And thanks again for visiting Trader Lab.